Hi guys, today is November the 7th, the day after the election, and we're looking at a chart of S&P 500. You can see as a result of this election a big huge red candle. The market dropped 34 points, 33.86 from this high, and this was the scenario from the very beginning, and the market just took a dive right away. This is the market open, 5 minutes it was down to 1407. It did not take long. This is the first 5-minute bar at 6:30 in the morning Pacific time, and therefore you could see the market dropped, and it just kept on dropping here till it hit 1388, and it bounced back a little bit and tried to recover, and then bounced. Then again they just pushed the market down. The reason was nothing else but the US election result. The Wall Street was betting that the Romney would win the election, and they really tried for it, and they pushed it, and then they tried, and then they pushed it, and they were highly disappointed in last night's result as election result, nothing else. It has nothing to do with fiscal cliff or the European debt crisis or the problems, because these problems were not there a day before, and such a savage kind of attack on the bear part is it doesn't happen on European fiscal year clashes. It only happens when the emotions are hurt, people are feeling hurt, because 49% of the people in this country won and 49% people lost last night. So those people who were lost was most of the time is the Wall Street, and they just do not like second term for the Obama administration. They have to do a lot of work on it. So the stock market took it on the chins and went down quite a bit, and as you can see here, we have a biggest red candle that I've seen, and it has penetrated that trend line and is just nearing that 1377 level right here and 1380 level. So another 14-15 points that can touch the 200-day moving average. That will be the first time it'll touch the 200-day it here since June 1st, and the market we have a good amount of correction. Okay, let's look at it. Dow Jones DJI. Let's take a look at it. What Dow Jones did. Dow Jones was down 312 point at given time. It was over 325. A major sell-off. This was a huge volume here too. A lot of volume. 164 million shares, and this is a nasty red big candle that is nothing but a sell-off, complete sell-off into the market, and the market has stopped dropping here as well. You can take a look at it here on the 5-minute, and look at this sheer drop in the first thing in the morning. 5 minutes you get up, you don't even have a chance to react. If you were not into the market, you cannot do anything. It's just like a gap, and then it continues filing here steadily for hours, and then during the day at about 8:30 or so it started recovering, but then again towards the close it slumped. When these actions happen, usually that is to reaction to something adverse. It's not because there is a fiscal cliff coming in, or other stuff is happening which is 2 months away. I'm trying to get NDX here. Let's see if it allows me to do that. NDX also gapped down here and finished the day here like you wouldn't believe, 2688. And let's look at it where it is in relation to the daily charts. It was here, a gap below its 200-day. Let's look at what NDX did to the other stock and why it went down 75 points. Now this was NDX was down 68 points. Apple also gapped up here. This downward trend line has not broken. It broke down from the 591 levels to 558 levels, and the sellers were just pummeling this stock heavily. It went down quite a bit here, almost 24 points. Apple also gave a dividend of $2.65. Other stocks to be noted here is Google, which maintained its trend line. This is the support line on Google at 670. If it breaks down, the hell will break down on it. It'll go down to 1635. But it managed to just stick around here today for some reason, and it hasn't done that. Most of everything on the screen was green, was red, nothing was green on it, and most of the stuff was just selling off 5 points, 10 points, 12 points, everything else. So let's see how the market takes it tomorrow. The market direction is down, and it's dangerous to trade in these conditions.